Good afternoon, everybody. By a couple of minutes, um, today we are going to be talking about real estate agents and financial mastery. So our program today is closing deals and cash flow. We have joining us today. Well, I guess first of all, if you haven't met me, I'm Ryan Otto. I will be your host today. I am the owner of Accent Financial Services. I am also the creator of Taxsmithing, which is our way of looking at taxes and doing strategies and being able to help people put together their lives in ways that will not only reduce your tax burden, but also um, help you with life decisions, help you with asset management, all kinds of things. So that's what we do here. I am thrilled to have a special guest joining me today, Garrett Harless from Lended Loans. And Garrett works with real estate agents, not just as lending partners, but also somebody who helps them buy their own houses too. Garrett, why don't you tell us a little bit about yourself and your business?
Yeah, thank you so much, Ryan. So my name's Garrett. I'm the broker owner of Lended Home Loans. We're based out of McKinney here in the DFW market, lend all over the state. We've been in business for about 9 years, or I've been a part of the business for 9 years, been in the business for about 15. We've got about 35 to 40 years worth of mortgage, we'll call it mastery experience. Kind of pride ourselves on being able to be flexible with different loan products. I'd say we've probably closed in the last couple of years just over about $10 million in loans that other lenders have denied. And so we pride ourselves in being able to kind of think outside the box, work with investors. And so just want to kind of come on here and share some insight and give some advice for whether it be seasoned agents, new agents, just relatively new business owners, and ways that they can use tax strategies to build some wealth. So,
That's awesome. I like it. That's what we're all about too. All right, so today we're going to tackle some of the more pressing financial pain points in the real estate profession. So some of those things are the commission roller coaster, reducing taxes and avoiding surprise IRS bills, managing cash flows, the riding the waves, right? Thriving in when interest rates climb, and building a financial game plan that works in all different markets. We're going to keep it just sort of conversational. We're going to talk about practical tips. We'll do some stories, and we'll have a little session with Garrett later on. And then if anybody's up for it, we can do a Q&A after that. So let's start with building a strong foundation. And so here, an important thing to understand, there's too many agents that treat their business like a side hustle instead of a real business. They mix personal and business accounts, they wing it with taxes, and at the end of the year, they're surprised when the numbers don't add up. Step one is separation. Separate your finances, your accounts, and your mindset. Don't operate this as a hobby. This is a business. And once you've got that separation, you can start thinking like a CEO. Think about budgeting, think about tracking, thinking about planning ahead. So, Garrett, I know you work with a lot of self-employed professionals. Have you seen benefits of when agents set themselves up as LLCs or S corps instead of just saying sole proprietors?
yes, 100%. Um, from a qualification standpoint, there's a lot of different things that we're going to take into consideration when we pull tax returns. More times than not, like you said, I see, real estate agents, brokers that, like you said, they treat it as kind of a side hustle. There's no planning involved. It's, hey, I sold, $4 million worth of real estate last year. I have X amount in revenue. I'm gonna go to Ryan and we're gonna write off this, write off this, write off that. And then at the end of the day, you get down to the net profit line and you're not able to really show what we all know you made, because we're going to go off of the net, the bottom line. So if you had $150,000, for example, in revenue, and you write off $100,000 of expenses to try to avoid that tax bill, Well, you have $4,500 a month of qualifying income, and we all know that affordability is at an all-time low right now, which makes it very, very difficult for us to go accomplish our end game goal, which is to build wealth through real estate, and other avenues, other investment avenues. So the majority of them we'll see as sole proprietors or just basic LLCs where it passes through to your Schedule C. And then occasionally you'll find an agent that's been doing this for a while and probably had a few visits with their CPA that didn't go quite as planned. And more often than not, you'll see them with S corps. And there are a ton of tax benefits there, a lot of retirement benefits there. We can talk a little bit more in detail on that, but generally they're going to be one of those two, or occasionally you'll find somebody that maybe started off with a larger brokerage, kind of got their feet underneath them, started to build a client base that was sustainable as a true business. And then maybe they came into contact with somebody where their interests and their business minds were aligned. And so they created a partnership. And in some cases, there's some benefits there too. So yeah, there's a lot of different ways you can skin the cat. Benefits to some. I mean, there's pros and cons to each, and we can get into a little bit more detail on that.
Yeah. Yeah, I mean, to me, the biggest difference is getting people to get over that hump and just accept that you need to operate like a business, and here's what that means. And then to take them to the next level becomes so much easier. Um, so we're both in Texas. About a year and a half ago now, Texas opened up S corps for real estate agents, and that wasn't allowed before. And the fact that it did, it really changed how real estate agents out here were able to treat their business. And there were so many people that they just didn't know that that wasn't a thing. They didn't know anything about it. So we had a big campaign when that came out, and we said, "Hey, everybody, like, come do this. Look at all of the money that you can save." And it was pretty crazy. And it was it was nice to see that the state of Texas was sort of catching up with how people ought to be running their businesses and not setting some of this stuff aside. So I was excited about that. And I still, you know, you'll find a lot of stuff online about, hey, you should be an LLC. Hey, you should be an S corp. Hey, you should do this thing or this thing. It really does depend so much on what people are doing with their businesses, and to a large degree, just how much money you're making doing this, right? How much of a not a side hustle anymore are you really having? And the bigger it is, the more benefits you can have by doing some of this stuff. Um, we'll talk about retirement stuff a little bit later, but this feeds right into that too. So
No doubt, no doubt. I mean, the amount of blanket information that is out on TikTok or Instagram, you know, you, and it pops up on my feed all the time because I do a lot of social selling and I'm very interested in seeing what people are saying. But just because you see something on TikTok from somebody that claims to be the expert doesn't always mean that it's factual, nor does it mean that it pertains to your business and how you operate, right? And
yeah,
so
absolutely.
it's just like I would assume that the tax industry is very similar to the mortgage industry. There is not a one size fit all policy for everybody, right? Everybody's scenario is different. And so backing your way and actually doing some tax planning, not just being reactionary on April 12th, because that's when they all call you, right? 3 days before the deadline. Not being
Yep.
reactionary in April to what has already been done, more than likely cannot be changed, right? It's planning and preparing for where you want to take your business, where you anticipate being, and what things you want to accomplish so that when it comes time to file, everything is aligned and you can take full advantage of tax policy.
Yeah. Okay, so let's talk about our next topic here is the commission roller coaster. And part of running a business, there's really three pieces of your financial statements that you need to be mindful of. The first one being your P&L, the next one being your balance sheet, and the last one being your cash flow statement. And that's the one that almost nobody looks at or knows how to deal with. And I think it's particularly relevant for this industry just because there's seasonality that can just have a major impact on what your income looks like. And there's also larger market forces at work that might determine, what your Q4 is going to look like. And you don't know anything about it, and you're just going to get hit with it when it happens. So, you know, so commissions, a roller coaster. One month you're on top of the world, closings are rolling in, and the next month, crickets. And one of the sort of easy ways to help yourself make it through that is, again, you're thinking of it like a business. All of the income is going to the business, and you need to pay yourself a steady salary that makes your life work. And as long as you understand that part of it, even if you've got commissions coming at you in chunks or whatever, as long as you keep your balance sufficient to manage your own steady salary and pay for your life, you're going to be fine going through all of those ups and downs, right? And as with any person and with any business, one of the things that you should absolutely do is plan for like 6 months of expenses. So if something happens, the market slows down, the deals fall apart, we have a 2008 crash, like whatever it is, at least you've got a plan for that just from like a cash backup, right? Um, And then you've also got all of your like monthly fixed expenses, MLS dues and license renewals and association fees and all that stuff. And the same way that you're spreading out your income, you should also try to spread out your fixed expenses and pay for them over time and have a schedule for that stuff. And again, that kind of comes into treat yourself like a business, and that's what a good business would do to make sure that they were covered, right? So, Garrett, do you see self-employed borrowers who do this well? And and if they do, how does it affect their ability to qualify loans if they've managed their cash flow consistently?
Yeah, so that's a great question. So, some of the more successful seasoned agents, one of the biggest perks of going the S Corp route versus an LLC is that you're able to pay yourself a reasonable salary. And that takes some strategy to kind of back your way into, well, okay, what did I did last year? What are my goals for this year? What do I think I'm actually going to be able to do production wise? And that's not to say that if you expect to make $100,000 this year, you can't actually um, recognize that $100,000 worth of income. But if you paid yourself, well, let me back up. If you did a very true and accurate budget analysis on what you need to make ends meet, and let's just say it's $6,000 a month, right? Pay yourself that $6,000 a month salary, push that other 4 grand a month or whatever that is to a distribution at the end of the year, which, correct me if I'm wrong, is not subjected to self-employment tax at the same
Yeah,
level, right?
right. If
And
you're as a as an S corporation, anything that you're pulling as distributions that you're not pulling as salary is no longer subject to self-employment tax. It's one of the biggest perks of doing an S corporation. Yeah,
exactly. And
absolutely.
so what I find is some of my most loyal investor clients are real estate agents themselves. And a lot of what they do is because they tried maybe 5 years ago, or even as recent as 3 years ago, to do something as far as, hey, I've got some cash, especially coming off of 21, 22 when it was bobbing for apples to sell a house, right? Hey, I've got some extra cash here. I want to go start building a real estate portfolio, which I commend. Um, but after, an initial, loan consultation, we start talking about, hey, there's better ways to do this. And so a lot of them have formed S corps. They pay themselves a salary. They kick all the rest of it to a distribution. They pay less in taxes, but we can still qualify them for future acquisitions of assets, real estate, right? In terms of what you said, and this is gold because I get a lot of people that, whether it's back in the day when all the Bravo real estate shows, $1 million listings were really popular. Hey, I want to get into real estate, right? Or I want to become a loan officer. And I think that's great. There is a lot of opportunity right now because a lot of our colleagues have fallen out of the industry for one reason or another. But in order to be successful, I firmly believe that you need to have a 6 to 8 month reserve in the bank because panic selling and stressful selling is not successful selling. Your clients feel it, your sphere of influence feels it, and it all trickles downhill. So if you can go into it with the open mind of, hey, I am actually going to treat this as a business. It is my full-time commitment. Every day I'm going to have a delegated set of activities that I'm going to do. If you're not worried about whether or not the electricity is going to get shut off, you're going to be exponentially more successful. And so, that's a big thing. And I've talked people out of coming to work for me for that exact reason. Like, hey, I think you'd be great at it, but I don't think you're quite ready. You know,
Yeah.
Same thing with the real estate world. It's the agents that are really, really stressed about budget are the ones that when something does fly off the rails and it doesn't just go like a Disney movie, we contract, appraisal's good, closing, right? If they run into any issues whatsoever, do you think they're more or less emotional throughout that transaction? Now, if they're
Yeah.
more emotional, do you think that results in a positive experience for the client, for the home buyer, or maybe a little bit unsettling, you know?
Yeah, for
And
sure.
so it's the domino effect. So yes, I think everything you said was accurate. Hopefully I didn't just roll off on a tangent there, but I truly believe in everything you just said.
No, that's awesome. That's awesome. Yeah, it's I actually I want to go back to something you just mentioned. So, are you seeing in the real estate industry or in lending in particular, um, are you seeing kind of employment being down? Like you don't have a good flow coming into the industry? I ask that because in the accounting industry, um, we're down hundreds of thousands of people. And there's not a real strong pipeline of people coming into tax and accounting. So it's getting kind of sketchy for some of the people out there. And there's, record number of people retiring right now and nobody to take their place. Are you seeing something similar to that in the lending world?
Yeah, absolutely. So I hold a sales call with my team every Tuesday. And 2 weeks ago, we were talking about, just where the lending environment was headed, where we thought rates were going to go. And obviously, hey, we need to be prepared for probably not a refi boom similar to 2021, 2022, but there is going to be a refi market there. Everybody that's bought a house since third quarter of 2023 is ripe and ready for a refi. When we look at the number of loan originators in the country, I wish I had the exact statistic right now, but it's very comparable to the real estate agent world in the sense that at the end of 2023, I believe we had over 400,000 loan originators in the United States. At the end of 2024, that number had dropped off to under a quarter million. At the end of this year, we're projected to have right around 119,000. and potentially by the end of 2026, less than 100K. So look at how many fewer people are out there doing what I do, right? I mean, obviously, the volume of home sales has also decreased in comparison, but that's a bit of a, there's a lot of reasons for that. We won't get into all that because you'll have me talking for 20, 30 minutes. But um, I mean, at the end of 2023 compared to 2024, don't quote me on these numbers, but I want to say that the real estate market, as far as agents that sold two or three deals or more in 1 year in a 12-month period, which is somewhat low-hanging fruit, you would think, but it dropped off by 40 to 45%. And
Wow.
so as we enter into a real estate environment where rates are coming down, not as quickly as we'd like, but they are coming down. And there's a lot of reasons for that. But we're also seeing a lot of supply. People are now starting to say, well, I didn't sell when my house value really skyrocketed, but as you mentioned, I'm getting a little closer to retirement. Don't really need this big of a home, or now we're empty nesters or whatever it may be. We're going to throw our homes out on the market. There's a ton of supply out there. There's a ton of supply. And as people start to wrap their head around the new norm of, okay, maybe rates aren't in the sevens, but we're high fives, low sixes now. Um, let's maybe jump out there and see if we can take advantage of this buyer's market that we have. I think you're going to start to see some real estate agents jumping back in because it is a great lifestyle. It's a great lifestyle. You can make a great living, especially for people that, don't necessarily want to send their kids to daycare. They want to be a bit of a stay-at-home mom or stay-at-home dad,
Yeah.
but be able to run a business out of their house, a very successful business. I think you're going to start to see people re-entering the market. I know that's going to be the case on the lending side, but you're going to see a lot of people that are now wanting to be rehired by, the Rocket Mortgage Machine and some of these call centers because they're going to be churning through their clients that have bought homes in the last 2 years. Well, those people I don't view as my competition. And
Yeah.
I would encourage that the real estate agents treat it the same way because Zillow's trying to take over the world, right? And Rocket is over there, trying to buy real estate agents essentially, right?
Yeah.
I would
Mhm.
encourage a lot of people to really take a long, hard look at how they conduct their business because this business is still built on relationships. I firmly believe that. And
Yeah.
if you can focus on that, and I'll talk a little bit more about that here in a little bit, but I think you can really build a sustainable business that has longevity well beyond the market that we're in right now, and um, and make a really good living doing it.
Yeah. That's it's kind of a key thing for us too. Like, oh, excuse me. Um, so we have our values that we, try to live by as a company, and the first one is hospitality. And in tax and accounting, and listen, I it's what I do, so I think I can say this. Uh, we have a tendency to not be people, right? We're numbers people and we're computer people, and we're not always people. And so one of the things that we've really tried to do here at Accent is make it a lot more about the people, which
Personal,
is yeah, that's in the world of everything is online. You can get your meals delivered, you can get your grocery delivered, you can get your, like everything can be delivered to you within a day. And anything that you want to know, you can just ask your phone and ask AI, and you can get any answer that you want to anything. We've become so much less about people that when it comes to the stuff that's really important, like you're going to buy a house, that's a pretty important thing in your life. When it comes to the major stressors in people's lives, finances is at the top, right? And so when it comes to stuff like that, I just feel like we really need to have people as part of the solution. And that's what it is. But it is also interesting finding people these days. And it is what it is. But you 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 mentioned something else that I kind of want to touch on. So you were talking about planning for the future, right? And this idea of how does a real estate agent retire? Or how do you retire with real estate as part of your plan, right? And and the tough part about that for a lot of real estate people is that it doesn't come with a pension. If you stop selling, then the money stops too. And so it's pretty important to think about, as somebody in the real estate profession, number one, how do you set yourself up with, say, just a tax advantage retirement account, right? And that's one of the things that you can do when you're really treating your business like a business is you can set up a SEP IRA or a solo 401k, something that you might have if you were working for somebody else, but that you don't have because you're in this profession and you're doing all these things yourself. And so you can still do some of those things. It's just most people aren't thinking about that, right? And and you're talking about real estate agents investing in real estate, and I preach that just all the time because as a real estate professional, you have like a tax superpower. You you get the benefit of being a real estate professional in a way that nobody else can. And that particular benefit is you're able to take your passive losses from real estate investments and put them directly against your active earnings, so your commissions. And for real estate professionals who can do that the right way and lose on paper a bunch of money over here and apply it to over here and basically cancel out their income as far as taxes are concerned, that's incredible stuff. And so when we talk about people who are trying to build wealth and get into long-term cash flow and retirement planning, for real estate professionals, that's a huge thing, is to be able to do that. I mean, what kind of stuff do you see as far as, you know, people are coming to you with all of their financials? And do you see, like, what percentage of people do you think you see that have retirement planning as part of their financial picture in the real estate environment?
Very, very low percentage, unfortunately, right? I will say this. 90% of the realtor partners that I've worked with for north of 5 or 6 years. I as well believe that our business does not go without relationships. And that does just not happen. It doesn't just happen. You have to put in a diligent effort, right? Now, part of what I do with a lot of these real estate professionals, these partnerships that I have, is I try to coach them on what they can do to take advantage of the opportunity that they have, which is they are the real estate masters. They have more information at their disposal than any average consumer. So when an opportunity hits the market, if you're primed and ready financially because you've done all the things to make sure that you're financially stable, you can take advantage of those opportunities. When rates were really high and prices were really low, that was the time, and it is still today, to go take advantage of some of these deals that present themselves on a daily basis, whether it's a distressed seller, somebody that's maybe, I hate to even bring this up, but going through a divorce and just has to sell, and it's maybe a tumultuous situation where it's time sensitive, like one person or both people just want out of it altogether. But you have these opportunities that will present themselves, and if you're able to take advantage of those opportunities from a tax benefit or even just a mortgage qualification standpoint, you know, you may not have as big of a tax problem as you thought. because, if you're staring down the barrel of, a really large check that you're going to have to write to Uncle Sam because you had a really good year, congratulations. You don't have a money problem, you now have a tax problem, right? If you have three, four, five different rental properties that you can depreciate, you write off the interest, you write off the taxes, you write off the major expenses because, those do happen. You have a water heater go out, you'll have a hailstorm or whatever. Those all get applied to that bottom line of net income to reduce your tax liability. So now, not only are you letting another individual pay your mortgage, build your net worth, your wealth, so that heaven forbid you get to be 65 years old and you're ready to hang it up and just go live on an island or whatever it may be. Well, I have news for you. Unfortunately, you don't have a Social Security check coming because you made a living uh, on your own. You were self-employed, right? So you didn't contribute into Social Security, and I don't think a lot of people actually know that. I really don't. You have to contribute to Social Security to reap the benefit, right?
Yeah. Yeah, I think you're right. It's weird. I've actually had, man, countless discussions with people this year trying to figure out now that they're ready to think about retiring, what are they going to get from Social Security and how can they do something about it now that they're 3, 4 years away from retirement? And Social Security Administration says, yeah, you're going to get $400.
Talk about a hammer being brought down on your dreams. You
Yeah.
think, okay, I have this nest egg. My financial advisor tells me that this is what I'll be able to pull from an annuity, on a monthly basis, and then I have X amount of years to live, which we don't know how long we're going to live, right? And so let me go see what I'm getting from Social Security. And I mean, how long have we been talking about? Well, we don't even know how long Social Security is going to be around, but let's just say, give them the benefit of the doubt that when we get to that age where we can actually draw upon it, now you find out, like you said, it's not even enough to cover your electric bill these days. And so, yeah, I mean, I think it's up to us, again, being the masters of our industry, the masters of knowledge, and all of the information at our fingertips to take advantage of opportunities in other ways. Because, if you let somebody else pay your mortgage off over the course of 20 or 30 years, and now all of a sudden you're to the age of retirement, or maybe you have a child that's needing to go to college. I don't know if you've checked what college tuition is these days, but how much easier would it be to pay for a 4-year school education for your child if you had this liquid asset over here sitting that you could go take a mortgage against, go borrow debt against, right? Or, you know, figure out a way to sell it and hopefully be creative on avoiding some capital gains. But you can liquidate these assets, or you just allow them to pay you the monthly cash flow. And now you have subsidized the lack of Social Security check with a really smart decision that you made years ago, that now gets to help you live a more healthy and comfortable retirement. So, I mean, the benefits go on and on and on and on. And
Yeah, and I've got a whole speech that I give people about that stuff too. And it's one of the big things that we tackle in our taxsmithing program is, yeah, how do you set up stuff for the kids? Like I've got a 4-year-old and a 7-year-old. By the time they go to college, it's gonna cost $750,000 each to put them through college, right? Like you think about that stuff, and but that's what the future is going to look like. And how do you plan for some of those things? And we get into a whole bunch of that because it's obviously different for each person. But um, yeah, there's so many ways of looking at it, and so many people just have not looked at that. And hopefully, more conversations like what we're having will get people more interested in thinking about that, and that's kind of the reason that I like doing these things is just to get people involved, right?
100%.
So speaking about your industry, for anybody who is aspiring to break into your industry today, what would your advice be to them?
Oh boy. Okay. So if you are coming into this, I think we've just kind of beat this concept down, but you have to treat it like a business. I think that comes down to three main pillars. One is you've got to master the basics. You've got to be a master of the basics. The second one would be it is up to you to build the trust among your sphere of influence. And what I mean by that, well, actually, the third one is going to be you just got to stay consistent. Okay. So if we go back to mastering the basics, I think that really kind of comes to you got to know your market. Your buyers and your sellers are wholeheartedly relying on you to explain things like affordability, inventory, proper expectations, different loan programs, rates, and be able to do it in simplistic terms. You know, a lot of people they think they know more than they do. And we, as the professionals and the experts in this industry, it's up to us to be able to explain it in simplicity. Um, and going back to, in my opinion, the most key component here is to set proper expectations as it pertains to buyers' affordability, you know, and being able to kind of have a general base knowledge of, you know, hey, here's about what the monthly payment impact is going to be on your budget for this price home or this price home or this price home. Matter of fact, you know, I have a lending partner, plug myself in, that can explain different unique and creative loan programs where we can, you know, buy down rates temporarily or permanently, and we can make that affordability more attainable. Like in North Texas, for example, we have a lot of new developments. Well, a lot of those new developments in some of these smaller towns or newer towns, they come with PID or mud taxes, which the
Yeah.
average consumer is not all that aware of. Property taxes, they only go one direction for the most part. But when you slap another 0.75% up to maybe 1.25% of property taxes on that $300,000 or $400,000 home, you're now talking about a monthly payment increase of $200 to $400 a month just to help the infrastructure be developed in that area. So I'm not trying to say don't go into these newer areas because there's a lot of people doing it, but be aware and set those proper expectations because what I see a lot of time, especially with newer agents, they'll go show them a home. I'll just use Melissa, for example, because I'm here in McKinney where they're developing neighborhoods all over the place and they show them the home and then they get to me and I'm like, hey, I just pulled property tax records, blah, 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 blah. Here's your monthly payment. And it's $300 more than what they were expecting and the deal falls apart. And that's deflating. It's very
Yeah.
deflating for the agent and also the buyer. And I just had this happen with a newer agent 2 weeks ago. The buyer came super motivated, ready to rock and roll. This never happens, but they showed him five houses and they bought the first one they showed him, or they made an offer, right? Just to find out that the HOA, because they were buying like a little town home, the HOA was $250 a month. Now, granted, they pay for lawn care and some other things, but it's a monthly fixed expense, right? And then it's also in a PID, and the PID tax and jacked up the property tax. So now we're talking about a monthly payment that was well over $500 a month, higher than what they were really comfortable with paying. They got so deflated. Mind you, they're getting married in a month and a half, so that's probably adding to some of the stress points. But, you know, had that agent been a little more aware, they would have said, hey, I'm really happy to show you this property. Just be aware it's going to be a little bit higher, you know, outside of your comfort zone.
Yeah.
Maybe we go back and look at that one on the way home, right? Just kind of as a little glance. So that's really important. As far as I feel like the most important component, focus on relationships. I mentioned it before, but this business is built on trust. So nurture your sphere, partner with strong lenders, vendors, have an answer for just about anything your client could potentially need, right? Hey, I need a roofer. I need a lawn guy. I need an electrician. I need an HVAC guy. I need a plumber. I need a CPA. I mean, part of what I started doing this year to kind of broaden my net is I started really kind of going after partnerships and relationships with CPAs, financial advisors, divorce attorneys. That's just because of the refund stuff.
Yeah.
But
Yeah.
but you know, when a client comes to me and says, "Hey, I'm looking at renovating my kitchen," I can send them three different people that I can vouch for that can help them with that, right? Be the calm voice that explains the process and options and risks clearly, and most importantly, without emotion. That's very, very important. You need to be able to sell solutions, not homes.
It's one of my favorite things about real estate agents is they've always got a guy for that. I just
Mhm.
I love that. And we're trying to do that here too. So for us, like there's a lot of things that we can do in-house, but hey, you need somebody to set up your solo 401k. I've got a guy for that. You need somebody to set up your trust. I've got a guy for that. You need somebody, you're going to go invest in real estate. You need a lender or a real estate guy. I've got a guy for that. It's being able to work with people at that level and be like, listen, I'll walk you up all the way to, this line where I can tell you as much as I can tell you. And then you need a guy for that. And here's the guy. And it's great to be able to do that. But yeah, it's one of my favorite things. Like anytime you're like, hey, something broke in my house, just call your real estate person and they got a guy for it. I love it.
Well, I mean, they do this for a living. How many transactions do they do each year? They've run into a lot of these issues. And
Yeah.
more importantly, they've probably vetted a lot of these vendors. They like to work with people that make them look good. And if they make them look good, then they probably did a fairly decent job at whatever that task was. And so, again, I think it's very, very important to build partnerships with people around you in this business so that you can kind of be a one-stop shop. I personally believe that every client, whether it's somebody that is just looking for credit repair because they know they're not prepared to purchase a home right now, to somebody that's bought 15 homes in their life, knows the way this is supposed to go, and is more than likely going to shop me with five other lenders that, are very transactional. But I believe that every client is a long-term investment. Be their tour guide on their
Yeah.
tour of building a real estate portfolio. And part of that is building a personal brand very early on in this process. Consistent, social selling, for example, with content that's not just you know, something you pulled off of ChatGPT like a graphic, right? Or, hey, here's my new listing. I think all that's great because some of that is just staying in front of your sphere, but be able to post success stories, client testimonials, real helpful local market data, right? So that when they're sitting around the water cooler at work and a colleague that they go to lunch with 3 or 4 days a week mentions, yeah, so me and my wife are, we're thinking about making a move. Oh, you know who you need to call? You need to call such and such person. They are experts. And then where do you think that person's going to do? They're going to go straight to your social. They're going to go straight to Google. They're going to be looking for your reviews. They're going to be looking for people that said you did an outstanding job because people work with who they trust and who they like. That will outperform the Zillow machine every day. And so if you stay consistent with that stuff and as you can tell, I'm passionate about this, but you treat it like a business, right? You treat it like a business. You don't just wake up in the morning and you say, God, I don't really know what I'm going to do. Oh, I guess they're doing a lunch and learn over here. I'm going to go do some busy work and make myself feel good about the day, right? Wake up with a purpose. And I call it so one of the things that my business coach made me do this year, and I know I'm kind of sitting up here on a pedestal here, but he made me start doing something that's called the Sunday night ritual. And every Sunday night, I plan out my week. And that's everything from the non-negotiables on Monday, Tuesday, Wednesday, Thursday, Friday to, okay, I've got an opening here. I need to fill it. I'm going to go take a past client out for coffee. I'm going to go, I'm going to go to FedEx and I'm going to mail off 50 handwritten notes, just letting some of my past clients know I'm thinking about it. Nothing, not asking for any business, but I'm just letting them know I'm thinking about them, right? If you don't delegate and time block your week, you will find yourself in this black hole of, I don't know what I'm doing. I'm just doing busy work. And before you know it, you'll have one of those months where you close 3 deals, made a bunch of money, and then you take a 3 month, hiatus living off of that cash, which goes back to your cash flow conversation, right? And then 3 months later, you're kind of like, oh my gosh, when's the next paycheck going to come in? And the average real estate deal takes 3 to 6 months to come to consummation, right?
Yeah. Yeah.
So what you're working on today is what you'll reap the benefits from 90 days from today. So don't let yourself get into that hole or that, ebbs and flow, uh, you know, period of lack of activity, high performing, lack of activity, high performing. That's
Yeah.
that would be my best advice for new agents and seasoned agents as well.
That's great. I like it. Yeah, and yeah, if you could see my wall, I have an entire wall on this side of the office that's whiteboard. And this side of it is the next 5 weeks outlined out, and then this side of it is the next week with daily stuff that just non-negotiable stuff has to get done, right? And yeah, like doing all of the planning, it's so important to uh I heard it once said, those who fail to plan to fail. You got to do stuff like that to be successful in these things. And
And
so
track it.
so
And track
yeah,
it,
and track
right?
it all. And for us, we do taxes, we do strategy stuff. We do bookkeeping. I offer business consultation. I offer CFO services where we'll approach this for people at a whole bunch of different levels. And yeah, and then I've got man, I probably study business and tax and accounting stuff for 3 hours a day, almost every day of the week. And there's so many different ways of approaching things that I just find all of this stuff kind of fascinating, the way that the human brain works, the way that sales works, the way that business works, the way that all of this stuff can all come together and create either havoc in your life or harmony, right? And that's what we really try to do here is let's figure out how to put this together in a way that is going to work for you. And yeah, so I think we actually went over a little bit on what our time plan was. I don't know if there's anybody out there in the chat that had a particular question. Let me take a look over here. It doesn't look like it. So I guess let's wrap it up by why don't you give everybody how do they get in touch with you and where do they find you in the world?
Yeah, so obviously you can find me on any of the social media platforms, Facebook, Instagram, LinkedIn, Twitter, all of that stuff. But my email address is Garrett, Garrett, at lendidloans.com. Lendid is spelled splendid without the SP, Lendid. And I'd be more than happy to share my contact info. Wish I had a visual here where I could post it up on the screen. But I'll get that info over to you if you want to maybe snippet that in the video when you edit it.
Yeah,
And
yeah. Send that over, whatever you'd like. I'll put it in at the end of this for everybody too.
Yeah, yeah. So, like I said, a lot of my realtor partners, I kind of let them know, like, hey, if you are interested in investing in real estate, and maybe your tax situation is not where it needs to be just yet, go to a CPA, go to a tax planner, have them prepare everything, send it to me. We'll have a conversation about what we can do with or without the tax return, and then we have other products that we can utilize that don't require that stuff.
Yeah,
I've got three DSCR loans going right now, two of them of which are with real estate agents. So I mean, because the rates are not that much different. The down payment requirements are not that much different, and from a simplicity standpoint, if all you have to do is get an appraisal that tells you what it'll rent for and offset the debt pad and move on down the road, when we close those things in 2.5, 3 weeks all the time. So let
that's
me know
awesome.
if anybody needs anything.
Yeah, absolutely. All right. Well, I think that's it for today. Garrett, thank you for joining us
Of course, thank you
again.
so much for having me.
Yeah. My name's Ryan. I own Accent Financial Services, and we do tax smithing. And anybody who is out there who is even thinking about how do I get into this stuff and how do I even begin this journey, I'll put up a link after this also for I do a free discovery call, and we can just talk about what your situation is and a couple of ideas how to move forward. And if you want to move forward with us building strategies up for you, or even doing some of the work for you, we're very happy to do that. So I'll put that up right after this too, and we'll see everybody again next time.